Hey, what's up you guys? Welcome back to the channel. So today I want to show you guys how to compare loan quotes and closing costs when refinancing your house. If you're new to my channel, my name is Min. I love to save money and talk about personal finance. Let's get into the video. So I've been getting a lot of questions from you guys about which loans to get. I've also been getting emails from you guys asking me for my opinion on which loan is the best. So I wanted to make this video to show you guys how to compare loans apples to apples, so that way you make the best decision. It's actually not that hard, and I'll point out a couple tricks these lenders try to play on you, so make sure you stay until the end of the video. By the end of the video, you're going to be a pro at this. Now the obvious reason for refinancing is to get a lower rate, but you don't want to pay a lot of money for it. This is a very large purchase, so it makes sense to know a little bit about this when you have to go through this process. Now all lenders have different fees and requirements, so it can be pretty difficult to look at all of these quotes and even understand what is going on. Most people just look at how much cash it's going to cost them to close and they just make their decision that way. Well, I'm going to tell you right now that is the wrong line to look at when considering a refinance. I have 4 loan quotes I wanted to share with you guys today so you guys can take a look at them. It's for a single family home, but the property is not that important. Let's head over to the computer so I can show you guys. Alright guys, I have 4 quotes here on my screen. These are actually from a subscriber. He asked me to analyze these quotes to pick the right one for him. So I'm going to show you guys exactly how to do that. So I've already gone and redacted all of his information from all of these quotes. So you can see here we have a loan amount of $510,000 for Allied, 3.125%, and estimated closing costs $7,500, and then cash to close is $3,048. And if you go down more, you can see the breakout of all the fees. So you can see every lender has their own fees. If you scroll down, you can see this one's got an origination fee of $0. They've got a credit report for $75. You can see here they have title insurance for $1,500 total, taxes and recording fees, prepaids and escrow charges, and then the total cost is pretty much added together here. Similarly here, it's the same thing. This one has lender fees, title fees, government fees, third-party fees, prepaids, and then a total cost is exactly the same. It's just slightly labeled a little bit differently. And same thing with Quicken here, same format, and then same thing with United here. And so you can see here, First Heritage is the only one that's slightly different. But what we're gonna do is take all of these numbers and actually put it into a spreadsheet so that way we can compare. Now before we do that, I wanna make sure that you guys are aware of one thing specifically, and that is the payoff amount. And so essentially this is the amount of money they would need to pay off your old balance so that way you can refinance into a new loan. Okay, so it looks like for this person, they have about $505,000 left on their mortgage. And so that's what this payoff balance is. And so it should be pretty much the same across all the loans, but this number can be slightly different depending on when you close your loan, because remember, you have to pay interest every day. And so you can see the payoff balance is $505,000 here. The payoff balance is $504,000 here and some change. And then the payoff balance here is $504,095. And so they're approximately all the same, and they should be the same because it's the same loan you're paying off. But the only reason why it's different is because depending on when your closing date is, and that's why all of these say estimated, that number might change. So what I'm going to do now is I'm going to take all of these numbers from all of these quotes and bucket them so that we can compare them apples to apples. And also, before we put these into the spreadsheet, I wanted to let you guys know that you don't even need to look at all these individual fees. Most likely you're not going to be able to change them anyways, and these are just the fees that every lender charges. They're all going to be different. A lot of these are junk fees, who knows what they are, and it doesn't really matter for the comparison's sake. And so you can see here, this one has a lot of lender fees, this one has a lot of title fees, compared to like Allied, where they only have 2 rows for title fees. And then Quicken, you can see they have 4 things in title fees. And then you can see here they have 4 as well for United. So none of that even matters. What we're gonna do is we're gonna summarize all of these fees into 3 buckets. The first bucket is lender fees and credits, if they have any. The next bucket is third-party charges. So that includes things like title charges and government fees. And then the last bucket is gonna be escrow charges, which is gonna include escrow fees and prepaids. And so you can see all of these loans will have those 3 buckets. So I'm gonna spare you guys the math and adding all these together. Some of the quotes make it easy because they just give you a number here, which is kind of nice. But First Heritage, for example, they don't give you a total, so I'm gonna have to manually total all of these up. And you're just gonna have to trust me that the number is right. So let's go ahead and do that really quickly, and then I'll show you guys what the spreadsheet looks like. All right, you guys, we are back, and I've gone ahead and again broken out those fees into 3 buckets, and I'm going to show you guys the comparison here. So all I did here was just transfer all of the numbers from all of these loan quotes into the spreadsheet. So you can see here loan amounts 510, that's what I put here, and then remember the payoff balance is $505,046, so that's what's here. Interest rate and APR doesn't really matter for the sake of this comparison, but it's just nice to have it all in one place. I've just added all the lender fees, or they've already added it for me, and then I've added $1,564 with the taxes and insurance $1,826, and that gives me that. And then for escrow charges, it is $23.96 plus this $16.41. This prepaid is part of the escrow charges. Okay, so I just added those together. And then just rinse and repeat, and on this one it was a little bit more difficult because they didn't have all the numbers, but if you add all the title fees and the government fees, that's this number here. If you add all the lender fees, that's this number here, and then so on and so forth. So I'm not gonna bore you with all of that, and so just trust me that all these numbers are correct. Now if you guys want to follow along, I do have all of these inside of my description below, so go ahead and take a look at that if you want to download these and follow along. I actually have a link to the spreadsheet in the video, so you can go ahead and download that and do your own comparisons. Alright, so now that all the numbers are in, you can see it is very easy to compare the loans. For one, you can see all the interest rates, you can see all of the fees that are being charged, and you can see all the third-party charges as well, and all the escrow charges. And you can see here I also put the cash to close into the spreadsheet, so you can kind of compare that as well. And then down here I also included the total closing costs. This is just numbers I pulled from the actual quotes themselves. So what's next when looking at this? Well, you might be tricked into thinking that, okay, I'm only going to pay $1,659 to close here. This probably is the best loan for me, and the interest rate is relatively low as well. Allied for sure is probably not the one you're going to pick, and you'd be right, but you might be tricked into picking Quicken Loans. And if you did end up going with them, I mean, it wouldn't be the end of the world because they're not that bad, but they actually are not the cheapest. And so let me show you why. So if you remember the payoff balance earlier, it was around $504,000 or $505,000. I've included it here in row 3. If we go back and look at the Quicken Loans quote, you can see down here they played a little trick, and you can see the loan amount is $510,400. And remember, the payoff balance is only $504,795. And so something is going on, and what's going on here is they are basically raising your principal balance on your new loan to basically lower the cash to close from the borrower. And so basically you're taking equity out of your house to pay for your closing costs. So instead of owing $504,000 on your new loan, you're gonna be owing more on your new loan when you refinance, and it's over $5,000 more. And so that's why this cash to close from borrower is much lower, because they're taking that into consideration and then subtracting all the fees out, and this is what you end up with. And if you look really closely, you can see total cost minus this cash from borrower is approximately $5,600. And you can see here the difference between these two numbers is that exact same number. And so essentially all you're doing is you're pulling out equity to cover the extra $5,600 from this total cost here. And so you're not really paying $1,600, you're still paying $7,200. So don't get tricked into rolling your closing costs into your refinance loan, because you're gonna end up financing your closing costs over 30 years, which is not a good idea. So if you guys are getting quotes for your refinance, make sure the loan balance is always the same across every single loan, and make it as close as possible to what your payoff amount is. So in this case, I would ask the lender to do $505,000 for every single loan quote. You can even see like Allied is using 510, these two are the same, United is using 504, so they're the only ones that are using the actual payoff amount as a loan balance. So this one is the least shady in my opinion. Alright, so with that out of the way, and we're not going to be tricked by this cash to close row here, let's go ahead and look at the total closing costs now. So this is the line you want to pay attention to, and if you don't want to watch this entire video, you can basically just look at what the lowest number here is. And so in this scenario, this lender, United Wholesale, has the lowest closing cost. And 99.9% of the time, if you just look at this line, this is going to be the cheapest lender to choose. Alright, let's now focus on row number 18, which is the total closing costs. And you might look at this line and freak out a little bit, and rightfully so, because these are really high numbers. Now, refinances always cost somebody money. Either it's going to cost you money or it's going to cost your lender money. And so if you find a free loan, then most likely the lender is paying all of the closing costs, right? With negative points or negative credits. So like here, Quicken is giving us a credit for their fee. So they're really charging us 0 in lender fees. But this credit can actually be large enough where it actually covers your third-party charges or maybe even sometimes your escrow charges. But in this scenario here, there are no lender credits that are gonna pay for our loan. And so really this is the closing cost to close on that loan. But there is something else that you need to be aware of. This closing cost includes additional fees, and this number is a little bit inflated. So what I wanna do is calculate the true costs of refinancing this loan. And the true cost represents how much money you're gonna be spending out of your pocket to do this refinance. Ultimately, that is the number you need to know so that you can calculate your break-even point when you do a refinance. That number is not this $38.95, and so it's actually lower than this. So let me show you guys how to calculate that. So if you remember in my other videos, I mentioned escrow charges are usually a wash. And what I mean by that is when you do a refinance, even though these lenders are charging you an escrow charge, a lot of the escrow charges is not really money you're gonna lose. A lot of the escrow charges are things like property taxes and property homeowners insurance. There are prepaid interests that are included in this number. That money's not really lost because all that's doing is just making you pay interest on your new loan up until you close. But remember, when you refinance, you're not making mortgage payments for 2 months. And so really it's a wash. But remember, escrow charges just pays for property taxes and insurance. And so at the end of the day, that bill doesn't change. Your county is not gonna change your property tax bill for that year because you refinance. And your homeowner's insurance is not gonna change because you refinance. And so those escrow charges are just paying the same exact bill. And so when you refinance, the lenders are forced to open a new escrow account. But remember, your old loan has an escrow account as well. So all of that money in your old escrow account, which is probably gonna be roughly the same as this new escrow account, it's just gonna be refunded to you. So let's say here First Heritage wants $3,300 for their new escrow account. You most likely have approximately $3,000 in your old escrow account. So when you refinance, that old loan closes and you get refunded back that $3,000. So I know it's not quite exactly the same, but you just consider it a wash every time because again, that bill is the exact same bill you're paying. You're not paying that bill twice. Now you're probably wondering, why are these escrow charges different for every single lender? And there's no real good answer for that other than the fact that some companies have different requirements for escrow accounts than others. So for example, Allied here is making you pay 4 months of homeowners insurance and 4 months of property taxes. And so this is what makes up $2,300. And then also it looks like they're also making you pay 1 year's worth of homeowners insurance and then also 20 days of prepaid interest. And then if you look at the other companies, you can see here in the escrow, this company only has 25 days of interest, 4 months of escrow, and 4 months of property tax. So pretty much the same as the other one, except they don't require 1 year's worth of homeowners insurance premium. And so of course this one's gonna be about $600 less than this one over here, or $768 less. And if you go to Quicken, you can see in the estimate only has 15 days for prepaid interest, and then they have 6 months worth of homeowners insurance and 6 months worth of property tax. And so you can see here their requirement is a little bit higher than Allied or First Heritage. And then if you go to United Wholesale, you'll notice that they don't even have the prepaids in the quote. And so you can see here the only thing they have is the prepaid interest in the quote. And so that's why their number is a lot lower, $1,275, because if they were to add 4 months of reserves in here, that number is going to be higher, right? It's going to be $3,700 more. But remember, all these escrow charges don't really matter because at the end of the day, you're going to get refunded back from your old escrow account, and it's paying the same property tax bill and it's paying the same home insurance bill. So you shouldn't even look at this line when comparing the true cost or the total cost of the loan. Also, one other thing related to the prepaids is even though Allied is requiring you to pay 12 months of premium for your homeowner's insurance, some of you guys may know that your escrow account eventually goes through an analysis and everything you overpaid ends up being refunded to you. And so you might get this mysterious check in the mail one day and it says escrow overages. And so this extra 12 months of insurance premiums that this company is charging you as prepaids, you probably don't even need it in there, but they're just requiring it. And so you most likely will just get this money back. So with all of that said, let's go ahead and look at a new line that I made here. And this line talks about the true cost of the loan. And all I did here was just ignored this line. And so you can see here, I've just added the lender fee, the lender credit if they have any, and the third-party charges together. And this will give you the true cost of the loan to you. And so that's why I said you can just ignore this line completely. Just don't even worry about it because it doesn't really matter. So if you look at this line now, you'll still see that United is still the lowest amount, and that's expected. Like I said, if you just look at the lowest total closing cost, it's always going to be the winner 99.9% of the time. There's only going to be a very small chance that it's not. And that's if somebody messed up your escrow charges or something and they put 0 here, and then all of a sudden this total is lower than this one. But remember, these are all supposed to be the same across all loans. So now that you know the true costs, you're probably looking at these two and making a decision. And maybe you've never heard of United Wholesale before, and Quicken is a pretty big name, and you might consider getting Quicken. But you have to remember, this loan is $2,900, this one's $2,600, and now you have to look at the interest rate. And you can see this loan is actually cheaper, and it actually has a lower interest rate. So it makes a lot of sense to get this loan over Quicken. Quicken, you're actually paying more and you're getting a higher rate. That doesn't make sense. Now you might consider using Quicken loans because the cash to close is much lower, but you have to remember that this principal balance is higher, and that's why it's lower. The true cost is telling you what you are truly paying, even though you're really paying this amount at closing. So you can see here, United Wholesale is actually a pretty decent company. They don't play any games. They don't increase your loan balance. You can see here their fees are relatively low. They don't have any loan costs, which is nice. They have a couple small fees that they make you pay, like credit reports, tax service, whatever these are. And you can see over here they have title and transfer fees, which isn't too bad considering they have no lender fees. And then again, the prepaids and the escrow, even though this information is missing, it doesn't even matter. Remember, these are all a wash. And at the end of the day, you just need to bring $3,895 to the table. But remember, these prepaids are not really a fee. You're just trading interest from your old loan and transferring it to your new loan at this new rate, which actually is saving you money. Now, let's say for whatever reason you can't come up with $3,895 to close this loan. Well, you can always go back and talk to the lender and ask them to quote you a higher rate. So here you can see we're at 2.715. You can always ask them to quote you a 2.875% loan or even a 3% loan, and see if by doing that they'll actually give you a lender credit. So you can see here Quicken Loans actually gives you a $1,379 credit, and that's most likely because the interest rate is higher than the lowest rate. So you can do the same thing here. You can go back to United or whoever you have and say, hey, can you quote me for 2.875%? And then what you can do is get all those numbers and put it in a new column, and hopefully here you'll have like negative $2,000 or something like that. And you can see true cost is $600 now, and this number here is also going to be lower. It's only going to be $1,895 in this scenario. And so you can see here by increasing your rate, they can give you credits, and those credits will help you close on your loan. And in this scenario, true cost is only $620 because in this scenario, this $2,000 is actually offsetting some of the escrow charges. So if you're low on cash, give that a try and see if you can get a loan that way. This method will lower your true costs as well as lower the amount of money you need to close on that loan. It'll make breaking even on the refinance much quicker, but you'll end up with a slightly higher rate. Well guys, I hope this video gives you a better understanding on how to compare quotes and how to not get ripped off or tricked when refinancing. Again, whenever you guys get quotes, make sure you do not let them increase your loan balance. This is a trick they play all of the time to make it easier for people to refinance. Look at one of your old statements to see what you owe on your current loan and use that number for all of your quotes. That way they're all the same and you can compare them apples to apples. If you're interested in other things they might try on you, check out my other link here. I talk about 5 mistakes to avoid when refinancing your home. If you guys found this video helpful, please hit that like button down below. It really helps my channel out a lot. If you have friends or family thinking about refinancing their home, make sure you send them a link to this video so that way they can check it out. I know a lot of people have no idea what they're looking at when they're refinancing, and so hopefully this video can help them save a lot of money and help them make the best decision possible. Also, if you like saving money and you like content like this, don't forget to hit that subscribe button down below. I post a new video every week, so make sure you hit that notification bell so you don't miss one. As always guys, have a nice day.